All right, we're gonna get rolling here. Weekend update. Gonna go through the agenda very quickly, and then we're gonna dive into the content. For those of you that have not been following me or watching my videos, my content, just a reminder, I'm not a financial advisor. Don't take this as any kind of financial advice. Just use this for your own education. I don't know which way these things are gonna go. They can go up, down, sideways. I'm here to present my convictions, and that's what we're doing here. To start, I'm going to go through a little bit of a high time frame exercise, kind of combining a little bit of trend analysis with some Elliott wave concepts, with some consolidative concepts, with um, just overall market structure concepts. And then I'm going to go into lower time frame Bitcoin. I'm going to go into MicroStrategy. I'm going to go to WGMI, the Bitcoin mining ETF. And I'm going to go into both of those against, well, WGMI against Bitcoin, and then MicroStrategy denominated in WGMI, because I'm getting a few questions on how I view those two. And so let's jump into it, folks. When we look at, for those of you that have been following me for a while, you know I kind of take three main approaches when identifying potential trends, potential um, consolidation corrective areas, potential targets. Um, I've got the 30-week moving average up right now. And, you know, if we're looking at, this is Bitcoin weekly, going all the way back to 2019, which I've been kind of claiming for a while now is the bull market that we're in right now, right? Kind of started back in 2018, where we had, you know, one, two, three, four, and I believe this last fifth move is in front of us. And so through the lens at that, you know, we kind of drill down and I look at it. So that was kind of a macro, you know, primary wave type count look at it. I've got the 30-week moving average up right now. And so looking at Stan Weinstein's concepts, uh, and specifically referring to his book, How to Profit in Bull and Bear Markets. I believe that's the title. Either way, it's an analysis utilizing, you know, levels the market is in according to trend in relationship with its 30-week moving average. I've got the 30-week moving average up here, and for all intents and purposes, right? Let's go back to 2017. We see um, probably a better example of this in 2017 in terms of trend analysis and, you know, stage analysis and trend analysis, and what stage the market is in, whether it's uh, you know, a stage one basing, right? And this is just another version of an reaccumulation, whether you call it a basing, a stage one uh, trend, or reaccumulation. What's the hallmark of this? Well, the asset is starting to negotiate flat line around the 30 week. The 30 week has been sloping down. It starts to flatten out. You then get a reclaim of this 30. Sometimes you get a nice check back. Sometimes you don't. Um, if you look at this from a Wyckoff standpoint, you know, I've kind of illustrated this is the reaccumulation. You've got, you don't have a clear spring here, right, folks? You know, sometimes you get springs, sometimes you don't. You have your selling climax, right, an automatic rally, and then you're kind of drifting down towards the bottom end of the range. You get this up thrust or secondary test, and then back towards the lows, and, you know, no spring here, no spring. Jump across this creek, you know, creek being kind of that downtrend, and then you're in what's called this sinus strength region, sinus strength, sinus strength, sinus strength, and then it's gone. The sinus strength here is depicted in, you know, trend analysis as a reclaim also of this 30 week. And, you know, again, you don't always get a nice check back, right? In Stan Weinstein's concepts, the ideal entry is, you know, a check back to this 30, but you never really got one. But you sure did get, man, this is really messy. Uh, you did get a lot of time, right? You had this nice consolidative type corrective, and I've got it labeled as 1, 2 here, ascending triangle, and no surprise, right? You got that flag into it, and how did it break out? How did it break out there? It broke out in essence, and this flag is simply what? This flag is just a ascending triangle, or whatever you want to call it. It's just a corrective phase from an Elliott wave standpoint. We call that, your corrective move versus your impulsive or your motive wave. You got your corrective, consolidative, whatever you want to call it, right? And so often, targets, you can use fibs, you can use, there's just so many different ways to kind of derive, all right, where may this asset be heading, should it break out? Let me get rid of this. This is from a previous exercise I did. Well, in this case, in October of 2015, after it broke out of this ascending triangle, where did it go? Well, didn't quite hit the length of that flagpole target. Well, it eventually did, but on the first impulse out of it, it came just shy. Or let's look at this from a fib perspective. And for those that use fibs, I've got my fibs in log scale. There's a setting here because, again, my chart's in log scale. Origin of this impulse, and you see this first move kind of came out at the 1618. I've got this 3-4 correction, which is the uh, larger scale correction coming out of this, 1, 2, 3, 4. This hit the 2272, folks. 2272. Okay. But again, that was just a consolidation prior to, again, the next move higher. All right. That was a good little exercise. I didn't plan on going back to 2017, but for the purposes of trend analysis, I think it's cleaner to look at 30-week sloping all the way up. This is this is your stage 2 uptrend. Stage 1 basing or Wyckoff accumulation, or the end of an A, B, right? C. Okay. Uh, all three of those concepts can be intertwined, and that's generally how I like to triangulate on my analysis. And so here we go. Stage 2, first kind of interaction with this 30-week should have been the clue of some distribution, right? Distribution. We got a reaction at it, and then just no subsequent closes above it, no subsequent closes above it, weaker price action, which led to another leg down. The point being, this was the beginning of distribution, okay? And that distribution came to its conclusion, and then we are now more interested in, at least I'm more interested in, kind of what's going on now in relation to, well, not now. We're going to get there in a couple minutes, but then what happened because to me, this area, this consolidation looks very similar to, is mimicking very closely to what we're doing here. And again, just because something mimics it from my point of view doesn't mean it's going to replicate it, but again, I like to triangulate in on probabilities and highest probabilities, and what the data and the trend and the analysis is telling me. And so we look at the 30-week here again, very similar, coming out of a corrective move where this 30 was reclaimed and then it was failed, and then a kind of a reclaim and it was failed again. Finally got a reclaim, and that was the 1, 2, third time here. End of this correction, this long consolidation. This was almost a year, okay? Almost a year. And so this was almost a reaccumulation, right? Reaccumulation. You had a stage 2 uptrend, stage 3 distribution, stage 4 downtrend, and then you reclaimed, so stage 1 basing, reclaimed at stage 2, stage 3 distribution. This was a long distribution, and then stage 4 downtrend, stage 1 Again, reaccumulation, that's that 30-week reaccumulation, breaks out of it, sign of strength that lasted for 6 months, SOS, reclaim that 30-week expansion. Okay. Reaccumulation, correction, 1, 2, right? It's all intertwined for me. And so now let me do a few things. Let me bring us to where we are today. And actually, no, one more thing. I'm sorry. Lastly, let's look at the character of this long consolidation correction. This is kind of this like a descending broadening wedge. I've got an image up here of a bull flag. And technically speaking, according to the literature, a bull flag isn't considered necessarily predictive if it's been dragging on for more than 6 weeks or a couple months. I forget the actual stat, but I don't care about the actual stat because I don't necessarily prescribe to that because there's a lot of evidence within Bitcoin that whatever you want to call it, right? Whether it's a bull flag, what is a bull flag? A bull flag is just simply a correction. Uh, what's a bull pennant? A pennant is just a corrective structure, right? Whether it's a 1, 2, right, corrective, um, whether it's let's come back over here, uh, 1, 2 flat correction in the form of a rectangle, okay? Whether it's, again, what I'm calling a 3, 4 in the form of a kind of this descending, broadening wedge, it doesn't matter, right? I'm less concerned about, oh, is this a bull flag? Is it not a bull flag? Well, this isn't technically a bull flag, right? That's a descending, broadening type of wedge. Uh, the point is this, okay? And the point is, generally speaking, and you see this not with just Bitcoin, but after prolonged periods of correction or shortened periods of correction, whether it's a higher time frame correction or a lower time frame correction. So a higher time frame Elliott wave, uh, primary ABC or a subwave or minor ABC or a sub ABC, doesn't matter. These things are all essentially the same concept, right? And so we had, let me turn that the same color. We had, for example, back in 2019, we had this structure that was, in essence, this long consolidative period. And, how did it break out? Well, it broke out, and where did it get to, right? This first target before any real correction was around the same length as the pole, right? Pole, breakout. And this image, you can do it more conservative. Sometimes you could come down here and get a bit more conservative target, which in fact it ended up being 2020 November, consolidated for about a month in that area. And so that's kind of a more conservative approach to measuring bull flag patterns or bear flags, the length of the pole from the bottom end of the breakout or correction to the actual breakout point. This image up here depicts that target from the breakout point. Either way, it hit both, right? In this example, it hit both and then some. So this is the top end of the target at 35,000, ended up going to 60,000. So it doubled, almost doubled the target. And that's not a bull flag. That's longer than a bull flag. Did it matter? No, it didn't matter. Didn't matter. This was in essence an impulsive wave, then consolidated in the form of correction, right? You know how I like to make that spring analogy and use Hooke's law, right? And that's expressed itself in financials and assets, where you got a spring and it's compressed and it's compressed and it's compressed. And so often when that energy is released, it's released with the same amount of force that it came into. That's the same concept of a pole, a flag, or rectangle, flag, whatever. It's released with that same amount, equal to or greater force. And so here is a perfect example of this is equal to force, this is greater force. In this example, we had a spring, energy released with greater force than this move. And that's what happened. Okay? That's all I'm trying to do there. Where else do we see this? We see it in reverse, right? With bear flags. We saw a bear flag, coming into this structure in January 2022. And let's see, what's the measured move here? The measured move is, that's the pole. Measured move was down to 23,000. What did it do? It exceeded that measured move by a lot, 22 down to 15. So again, same concept here. That energy was released with greater than the force that it came into. All right. So where does that bring us to? Well, let me do one more exercise. And man, I didn't even tell you why I was doing this, but what I'm attempting to do is derive like very conservative targets from where I think we're potentially breaking out from here, given that we do break out, and also show us the similarities in this structure to where we are right now. Okay, mind you, we also had, this was COVID crash. We had this was one of the greatest VIX events we've seen since 2008 or 9. In terms of volatility, expressed itself in the VIX and stocks, which also worked its way to Bitcoin. And interestingly enough, we had that same event unfold right here. Now, it doesn't show up in this weekly chart in line form, but if I put it in candle form, we see it clear. Okay. All right. So that's another point for this potentially being very similar in structure and in character to what's going on back here. But forget the bull flag, target, pole, breakout. Let's use fibs and let's see what the fibs tell us. And so and here I'm just going to show you where I'm going to measure my fib from, folks. Okay. First impulse, origin of impulse. Okay. This is where I want to drag my fib tool 1, 0 and see where these extensions ended up from a Fibonacci perspective. All right. And so if we do that, let me just move this aside. I was just showing you this for more of a confirmation on that pole measuring technique. I don't need to refer to it again right now. So I want the image to be very, very clear. Next, we are going to drag our fib from what I just shared with you, okay? 1, origin of impulse, okay? And what did this entire structure 1, 2, origin of impulse of 1, where did it hit? To a T, that line right there, and that is circled right there to the left, the 2.72 extension, 2.272 fib extension, okay? All right, that's interesting. That's interesting. Let's see what else Bitcoin has shared with us. And from an Elliott wave perspective, the most common extension out of impulses is the 1618, but Bitcoin has, demonstrated in this case at least that it exceeded that 1618. Next, let's take a look at again, bull flags, rectangles. I don't care what it is, pennant. We're talking about consolidation structures, right? This here is a rectangle with a pole, right? So this, again, it's a flagging type of structure, but in the form of a rectangle. It's consolidative, corrective. I've got it labeled 1, 2. From a Wyckoff perspective, folks, what is this area? Remember this, for those of you following me last summer, this is the reaccumulation. This was a spring, right? We had a selling climax, automatic reaction, secondary test, boom, spring, test coming out of it, LPS, sign of strength, sign of strength, sign of strength. That rectangle was a sign of strength / correction. Any way you slice it, let's take a look at just the most conventional target coming out of this rectangle. Got our pole. Let's measure from 2 places. From the bottom end, that target was 47,693. Did it hit it? Yeah, it hit it. It exceeded it. Let's take a look at the target from the breakout. The target for that pole. So again, what's the pole? The pole is just the impulse energy coming into the correction, the spring, the consolidation, the energy regathering, and then the energy release with equal to or greater force. And see, we've seen again here, greater force, folks. Both ways that I draw it, the high end of this expression of that spring energy impulse, whatever you want to call it, being expressed was 58,000. We got up to 70 something, 2, 3, 4, whatever. All right. So what's the next part of this exercise here? The next part of the exercise is the fib extension. So let me take same concept, get rid of this fib. This is a different exercise. And let's just do same thing that we did before. I'm measuring from 1 to origin of impulse, this area, 1, and I'm dragging it and I'm seeing what that target, what level that was from a fib extension standpoint. And that's what we're going to do next. So let's do this exercise, and lo and behold, what number pops out again at us? There's not a lot of coincidences when it comes to nature. Fibonacci's are expressed in nature as well as assets. And where do we stop or consolidate around? The 272 extension, which was 68,792. We exceeded it by a little bit, but what can you also see? Forget the actual target, but the respect of this number has seen in 1, rejection, can't hold it, rejection, right? That's his level, 68,792. That's that fib extension. And so very much an important level has been, and let me just come back here one more time. So what we also see is much like this area back in 2019, we have, I believe, another type of reaccumulation event where, we have a 1, 2, kind of 3 coming out of it here, making a potential higher low. And that's the move I'm anticipating coming next. MicroStrategy has been telling us this, and it kind of confirmed it this week. But we shall see. There are no guarantees. All right. So what could potentially be a reasonable target from where we are coming out of this consolidation structure? Well, let's look at this from a flagpole perspective and just say this structure on its own, from a breakout perspective, a reasonable target could be 187. We could get some consolidation even below that at 156. If you want to be the most conservative, 145 to 160. Maybe there's some consolidation that goes on there. But a very conservative target being 189 on the high end. But again, what has Bitcoin showed us in the past? Let's use a fib tool. I already told you what it showed us at least the last 2 times on major breaks following consolidations, that 272 extension. Where is that 272 extension? And again, folks, this is what Bitcoin has showed us in the past in the context of what I believe this bull market has appeared. And so just going in line with previous moves within this bull cycle, the 2272 is 265,000. Okay? 265,000. And it's not a coincidence where I have my targets here, folks. This is a very conservative based on no extended fifth. This is like, this would be standard ballpark move in the context of what Bitcoin has done. And so that, the couple different ways I derive my targets, but I felt like sharing with you today how I kind of put all these together to come up with my targets. That was a deep dive, folks. That was a deep dive. Now let's get into the daily chart and this is more speculation than anything. Again, the lower the time frame goes, the less accurate you should imagine becoming, myself included. This is more speculation than anything. I am not trading any of this based on any of this stuff on low time frames. Traders are going to lose Traders are going to lose. I'm sorry. Maybe there's some traders that are making, doing really, really well, but those that hold long term, the most convicted are the ones that win, and the ones that make the least amount of moves are the ones that are going to win, especially in assets as pristine as Bitcoin. And so I like throwing that in there, folks. I like throwing that in there. There's a reason why the Forbes 100 you don't see swing traders on that list. That you just don't. Why? If this was this easy, then hedge funds would have algorithms and machines that would take it over, and the owners of those hedge funds would be on those lists. Well, maybe a couple are, who knows? But I digress. Anyway, what I've got here is a couple things going on. I've got the most important thing I'm looking at right now is this volume node right here. In terms of where is the most amount of volume in this entire range, we're going on 7-month range. Where is the most amount of volume been trading? And that's been right at this line right down the middle at that $62,800, $63,000 area. What do I have? How am I kind of counting this right now? Well, I'm counting the spring here and August 4th, 5th, that VIX, that crazy VIX spike that we hadn't seen since in terms of magnitude, COVID, as well as the GFC in 2008 and 9. This 1, 2, 3 ABC I have as the first impulse, and yes, I realize that's ABC as impulse. I'm calling that as an impulse. I think we do see them. They're not very common, but I think that's what we have here. And then we had an ABC correction 2 tests, 1, 2, 3, 4, 5. We've got a sub 1, potentially ABC being completed here. And then I'm looking for this move to come out of this entire consolidation, this entire correction, for us to make a move into the 80 to 100K range to begin this final move. And so that's how I'm looking at this until further notice. Is there anything more I want to add on this chart? Not really. Not really. And here's why. Because MicroStrategy to me is just is much clearer of a proxy in terms of what's going on. Let me get rid of the RSI. And again, we just have a beautiful, right? This is just a rectangle consolidation, however you want to look at this, right? Breakout from there, breakout from there. You got a confirmed breakout. You got a confirmed breakout. And if we drill back down on the daily chart, you don't see these too often, but you get what a beautiful, just technical, right? Check back where you get a check back to the breakout, and no surprise, a lot of people probably entered here on that check back, and we got that incredible move Friday. And so just looking at this structure, highest closing price since they put Bitcoin on the balance sheet, that to me is a sign more than anything else that we are in a breakout mode and pending for Bitcoin. And so just beautiful. This is exactly what you want to see. WGMI, I've got the, let's see, weekly chart here. And just a couple things I'm going to point to, and I'm not going to get too redundant. I think there's a good chance that WGMI is telling us the same thing is going on. If we look at Bitcoin is under its 30-week, okay? MSTR is well over its 30-week. Well over. Let's just pop that up. Yeah, so the 30-week sitting at 148 and change, 212. WGMI, the 30-week is sitting at 1830 something. 2 candle wicks below it. Also to note, folks, here's the volume node. So the most amount of volume at what price? Literally since 2023. at this price we're at right now, at 18, 17, high 17s, low 18s, this is where the last 2 weeks price has been absorbed. Price has been absorbed. And look at these red candles. I mean, that's a lot of volume for, a red week. Yet what did price do? Price remained flat. Okay. Where do we see, equal to or greater volumes? We saw up here, here. What did price do here? Look at that drop. Okay. So we had 25 down to 18. So whereas, another area with a lot of volume, we saw a reduction of price. Here we're seeing absorption at this volume node. I'm sorry, there's a lot of stuff marked up here. Where else did we see that type of those type of red candles? These were higher. And again, we saw a reduction, about 10-20% reduction in price there week over week. So very good sign. Very good sign for the Bitcoin mining ETF that I just think lagging behind everything else, behind MicroStrategy, behind Bitcoin. And so the way I've have it counted here, we completed 1, 2, this kind of micro 1, 2, and 3, 4, 5 is next. So that's how we're looking at it. Bitcoin miners against denominated in Bitcoin on a weekly time frame, looking at the 30-week moving average. Okay, there's a 30-week, folks. And this is our 1, 2, 3, our third weekly close above it. We've got this weekly cloud that looms large right here, okay? It's a big cloud. Now let's look at that on the daily. Because I think there's some alpha here on the daily in terms of potential information that can be derived. And here we are, closed in the cloud. It's a red cloud and it's a thick cloud. When were the last times we closed on a daily time frame in this red cloud? I'm going to point your attention to it. Coming all the way back to, let's just go all the way back to the inception of this chart. Okay, 1 instance, 2 instance. This was a reclaim. I'm not going to count that. 3 instance, 4 instance, and now we're at instance number 5. What did the price of the miners do in relation to Bitcoin in each of those situations? Well, against Bitcoin, the first time went up 42%. Second time it went up 22%. Third time it went up 68%. Fourth time it went up 84%. And so 1, 2, 3, 4, and now we're in the 5th, and every instance before a close in this cloud has resulted in a considerable short-term move, short-term defined as, months, against Bitcoin. And so the way I'm kind of counting this here now is depicted above. And so my assumption, if this is just one, large channel and the Bitcoin miners basically bleed, they lose against Bitcoin long-term. They have. That's the pattern. However, so far in this pattern, we've had 1 touch on the top of this channel, 2 touches, 3 touches, and I'm saying at least a 4th touch is coming here, okay? That's what I'm talking about. So a counter trend move in the short term, then I'd expect, later on down the line to keep going, bleeding against Bitcoin, which is long term why I don't hold the miners. They're more of a short term swing for me, okay? That's what I see on miners. WGMI against or MicroStrategy denominated in Bitcoin. What am I seeing? Man, again, this chart tells me that MicroStrategy long-term against the miners is a better investment. That's what this chart tells me. Since its inception, that's been the reality. MicroStrategy against the miners, if we're going all the way back, to the inception of the WGMI index has outperformed the miners to a tune of 7x. That's massive outperformance. However, there are periods in that outperformance where the miners take over. And when are some of those periods? Well, this red line, this dash red line, the vertical across the board, basically outlined a set of conditions that are going on right now. And that's where the weekly RSI, MicroStrategy denominated in Bitcoin, exceeds 70, so exceeds overbought. And so what did we have? Let's just look at the following 2 months. So July, August, September, 18% reduction against the Bitcoin miners. The following 2 months in the second instance, what do we see? 2 months later, so it was at October, November, flat, basically, flat if we're looking at forward 2 months. In that instance, if we're looking at the next instance, which is October 2023, December, so forward 2 months there, reduction in 12%. Forward 2 months from the next instance was February, so increase of 34%. And so, there isn't a lot I can surmise here. The only thing that I would say is that, a word of caution, given the last variable on this chart, that is, where are we at? Potentially, we are at all-time highs. We could be potentially forming kind of this bearish divergence where it wouldn't shock me to see MicroStrategy next week just take one more pop, right? And then, you got something like that where a divergence is playing out and it either does something like that or something like that, and then it's heading to the bottom end of the range. Or I'm wrong and this thing just keeps going. Who knows? Who knows? But that's just the way I'm looking at it. Unfortunately, not a lot of clarity here. I wouldn't be chasing MicroStrategy. I don't know. I wouldn't be chasing at this level. Where you chase MicroStrategy is, in again, not financial advice, but where you chase is when you've got the opposite set of conditions, okay? Where you come down towards this end, right? So this is right RSI, where you're closer to here is where you chase, in my opinion. Okay. All right. That's it, folks. That's it for the video. I hope you guys all have a great rest of the weekend, and I look forward to seeing what unfolds this week. Take care.